Hello traders. Today is the 2nd of January 2011. Okay, and this is the Australian dollar US dollar currency pair, the monthly chart. Okay, yesterday we posted a video on YouTube where we show you this pattern, a bearish reversal candlestick pattern. The price must be first in the uptrend, and then the price hits a particular price level right here where I place my cursor, followed by a down, a bearish candle. The bearish candle is now followed by a bullish candle, and then the bullish candle is followed by a bearish candle. This is a typical a bearish reversal candlestick pattern. The position must be on top of an uptrend. Okay, so the price must be going first. And we pay attention to the low of the second candle. We pay attention in this particular case to the high of the second candle. Okay, the third candle must not take the high, must not violate the high of the second candle. Okay, very important. I repeat, the second candle must not rise above the high of the second candle. Okay, but there are sometimes some exceptions. That's what I want to show you now, and you may understand why. There are sometimes some exceptions where the price may close above the high of the second candle, but this is when you are trading that particular exception, you need to be very careful because it's not perfectly set up. Okay, and then the third candle must be bearish, so the price is rising first and then hit one particular price level, followed by a bearish candle, and then followed by a bullish candle. The third candle, which is a bullish candle, in normal condition, in this setup, for the validity and the solidity of this pattern, the third candle must not close above the high of the second candle. As always, because we are dealing with human being behavior, there will be some time where you see some exception, but when you see some exception, you must be very careful because the setup is not perfect, so you need to deal with it very carefully. Okay, and the third candle must the third candle must be followed by a bearish candle. Okay, at the close of the fourth candle, at the close of the fourth candle, which is a bearish candle, we will place order here to sell with stop loss 10 pip or 20 pip above the high of the fourth candle. This is what we said yesterday in one of our videos regarding the bearish candlestick reversal pattern. Okay, so this is the same thing I want to show you. One thing regarding this Australian dollar US dollar currency pair, because we are now looking for opportunity to sell this currency pair. But like I said to you, it's a bit tricky trend because we are bullish towards the Euro USD, and at the same time we are bearish towards the Australian dollar US dollar. There is a bit of conflict, so you need to use your tool carefully. Okay, so this is the monthly chart of the Australian dollar US dollar currency pair. As you can see, the price was in an uptrend since March 2009. Same thing like a Dow Jones and all the major indices. The price went up big time. Okay, it went up nicely up to this level, uptrend, pure uptrend since 2009. The price just was going up. Okay, now we hit level here. I want you to pay attention to these three candles here, the big three candles here. All of them are monthly chart. This is the first one that hit this level here with a bit of selling on top. As you can see, the shadow on top of this candle here. Okay, followed by a down candle. So one down, one up. Okay, no, one up in this particular case, one up, one down. Okay, one up, one down, one up. Okay, we are waiting for one down. Okay, so the pattern that we are looking for is to see one up, one down, one up, one down. The pattern of one up and one down is in fact a reversal pattern, but when you have a one up, one down, one up, one down, which is a double one up, one down, it's a very powerful bearish reversal pattern. The position of the candle must be on top of an uptrend, very important. So right here we see that this Australian dollar US dollar currency pair was going up, so we have one up, one down. Okay, 1 month completely up, okay, with a shadow on top of the candle, one down, okay, which is another month, one up again. In this particular case, there is a bit of exception. That's what I'm saying to you. This particular pattern is not perfect, but you need to deal with it carefully. That's why there is a bit of conflict in this trade. You need to trade like a pro in order to take advantage of it as soon as it's clearly confirmed that this is a bearish pattern. We'll take advantage. You may perfectly wait till the end of January. If at the end of January we have a bearish candle here for this Australian dollar US dollar currency pair, you place order on the 31st of January at the close of the market below the closing price of this Australian dollar US dollar currency pair to sell, placing your order to your stop loss 10 pip above the high of that candle of January. You may perfectly wait till that time to confirm that this is a valid bearish pattern. But if you want to day trade during that time, you may perfectly do that until the end of January, because beginning of this January there are a lot of activity going on, a lot of movement, a lot of changes, portfolio being readjusted. So pay attention carefully to this month of January. Usually some people say that when January is down, the whole year will be down. Some people believe that when January is up, the whole year will be up. That can be true for this Australian dollar US dollar currency pair. Most professional traders are watching this currency pair very carefully for a reversal. So we will be watching carefully this Australian dollar US dollar currency pair. If I draw, why do I say that there is a bit of exception in this particular case? If you look carefully, this candle here, the bearish candle, which is the second one down, the high is right there. I will draw a horizontal line there for you. That's where I put my horizontal line. Okay, you can see that the month of January, the month of not January, the month of December, when above a bit close above the high of the month of November, which is not supposed to do. As I show you in the pattern, the third candle must not close above the high of the bearish second candle right here. But when we are looking at this chart of the Australian dollar US dollar currency pair, we can see clearly that the price on Friday before the celebration of the new year went above the high of last month, which is November. There is a bit of excitement, you can imagine, because all the currency pair want to close high at the end of the year. The closing price last Friday was so important for all the politicians, all the currency dealers, and they expect their currency that were in the uptrend to close high. If you look carefully on this, I will show you the 15-minute chart of this Australian dollar US dollar currency pair. This is the 50-minute chart. Okay, just so you can see the last hours here, there was a bit of fast movement to the upside for no reason, followed today by a selling pressure. You see this three candle here. Do you see the horizontal line here? The horizontal line, that's the high of last November. That's where the high of last November was. And as you can see in the last hours of the trading day for Friday, 31st of December, there was a bit of excitement and they push it to the upside. This is what I call exaggeration. Okay, there was a bit of exaggeration on top of this level. That's why I say to you, the pattern can be perfectly valid with some exception, because we know what they are trying to do. The psychology of these people, they want the year to close very high for this currency pair, the Australian dollar US dollar currency pair, to achieve one historic price level, which was in the region of 10255. Okay, they want to make a history, they want to put a stamp on it. The bull were a bit celebrating here to push it to the highest point to finish the year very, very bullish. That's why it went above. As you can see, only for 45 minutes we had this movement to the upside. Okay, so as soon as today we see the price crossing back below the 10188, that will give us a bit of confidence. Okay, 10188, which was the high of November. Okay, we will be looking for opportunity to sell below the 10188. That will be the psychological level for us to watch carefully. Mark it down. the 10188, okay, for the Australia dollar US dollar currency pair, the high of the month of November. So this is only 45 minutes. When they push above it, that's why I say to you, still we are watching this pattern carefully. So I believe that it was a bit of exaggeration. The price normally should stop at the high of the second candle according to our pattern. One up, one down, one up, expecting now the month of January to be a movement to the downside. We are bearish, very bearish towards the Australian dollar US dollar currency pair. We will watch carefully this currency pair, looking for opportunity to swing trade to the downside using the TSTW SYS08 or the TSTW SYS008. Okay, so one up, which is the monthly here, one up, okay, one up, one down, one up, one down. Okay, we are expecting January to be down. A bit of exaggeration as I show you here on the 50-minute chart. The pattern that we are looking at or we are expecting to be formed, which is not perfectly set up right now, is one up, one down, one up, one down. The pattern of one up, one down is in fact a reversal pattern, but when you have a double one up, one down, it's a very powerful trading candlestick pattern. The price must be first in the uptrend, followed by this pattern, and we place order below the closing price of the fourth candle, stop loss 10 pip or 20 pip above the high of the fourth candle. So this is about the Australian dollar US dollar currency pair using our powerful reversal candlestick pattern. I hope you enjoyed this video also, that you put into practice in order to cream the market consistently. We are the TSTW24 traders and the TSTW SYS08 traders. We are watching carefully the level of 10188 today. As soon as the price closes below the 10188, we will be looking for a clear-cut opportunity to sell in the direction of the price, knowing that the price is the #1 indicator. Until the next time, enjoy yourself and be very happy. Thank you for watching and speak to you soon.